pretty clear for people who had a J&J vaccine to go ahead and get a Pfizer or Moderna booster. Other than that, it's not. It doesn't seem to be that as great a difference.
Okay, because that we're being really specific because we're wondering.
Yeah, these are questions that we were talking about last night.
I mean, I've hit my 6 months from my second shot, and I'm getting bombarded, to be quite honest, by emails of saying, "Come get your booster," and I'm not quite sure that I meet all the criteria, but I'm also thinking, I'm trying to figure out what to do.
Right. I haven't gotten bombarded by emails, so I don't know what that says about the pharmacy that I go to. But
Sorry.
I did get my original shots from a mass vaccination site, so maybe that's why the follow-up hasn't been there. But yes, I think for people who had Pfizer or Moderna, there doesn't seem to be much of a difference to get another Pfizer or Moderna mix or match or whatever. I think it's important for people to remember that, these are different approaches, different vaccine companies, but they are still targeting the same virus. They're trying to stimulate your immune system to the same virus, the same part of the virus. And so I wasn't expecting to see much of a difference between these mix and matches.
Well, Dr. Gronvall, in the last minute that we have with you, help us understand what's going on in the UK, because for the first time since July, COVID-19 cases in the UK topped 50,000. The country's certainly seeing a surge there. What's going on?
So it's always hard to know exactly what's going on because, there's public health is, especially as we have all seen with COVID, there are lots of different mitigation measures that are very unevenly applied. But the vaccination rate for younger people is not good, and so they haven't. It's even less than the United States, and so that is where a lot of the cases are coming from. And so we all need to do better for younger populations because they incur more risks from COVID than they certainly believe that they do. But hopefully we will see some improvement over those numbers, and hopefully next week when children may be starting to get vaccinated, and then in the coming weeks.
Got it. We got to run. Hey, thank you so much, as always, Dr. Gigi Gronvall over at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on Bloomberg Radio, watching us on YouTube, and President Trump, former President Trump.
He's trying to create a social network to rival the likes of Facebook and Twitter.
Indeed. This is a fascinating story. It's among our most read, folks, and we're going to get into it. What do you think?
Easier said than done. I mean, his blog lasted a month.
Yeah, that's true. All right, we'll see what our Jerry Smith has to say. He watches the media world and reports on it. Let's get to Charlie Pellet, though, with a check on your top business stories. Hey, Charlie.
And I thank you very much. Facebook shares are up now by 0.1%. Twitter on the minus side, down by 0.9%. We've got more on Facebook, Twitter, and the former president coming up. Stocks, they are trading mixed. Been a choppy session. Right now, we do have the S&P. Right to the numbers. We'll give you the why in a moment here. But the S&P up now by almost 2 points. Been swinging between gains and losses. Whole lot of drifting going on today. The Dow down 91 points, lower by 0.3%. A lot of that having to do with earnings out of IBM weighing on the Dow. IBM shares down by 8.7%. NASDAQ, though, pushing higher. NASDAQ Composite Index up 52 now, up 0.3%. NASDAQ 100 Index up by about 0.4%. 10-year yield 1.67%. We've got the 10-year down 6/30 seconds. Spot gold down 0.1%. 17.80 the ounce, down $1.30 the ounce right now. Crude down 1%. West Texas Intermediate down 0.8%. 82.58 a barrel on WTI, and Bitcoin dropping now by 4.5%. 63,009 right now on Bitcoin. The Federal Reserve's Beige Book says employers across the United States are struggling to attract and retain talent, and in some areas, vaccine mandates have a lot to do with that. We do have, as I mentioned, stocks are trading mixed right now. As for what's going on with the Beige Book and those vaccine mandates, Dr. David Dowdy is an epidemiologist at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning, he was asked about those employer vaccine mandates.
If an employer is saying that the best way for us to protect our employees is to mandate the vaccine, then employees have a right to decide whether they want the vaccine or to find another job. And I think both are reasonable. We're not trying to shame people. We're just trying to do what needs to be done to protect the workforce.
Dr. David Dowdy of Johns Hopkins, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we follow, we've got Pfizer down 0.3%. Its German partner BioNTech shares surging 6% right now. Those are the ADRs. AstraZeneca's ADRs up 0.8%. Moderna higher by 2%. J&J, Johnson & Johnson down 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We have been dying to get to this story. We were all over it on our planning call, and Tim, it's among the most read stories.
It is. Remember, former President Trump, he was banned from Twitter and other platforms, and he's got a plan in order to get back online. He plans to regain his social media presence with a new company, the Trump Media and Technology Group. Well, joining us now to talk all things media and President Trump is Jerry Smith. He's media reporter here at Bloomberg News. He joins us on the phone from New York City. Jerry, I didn't know about the Trump Media and Technology Group. I didn't know that he was working on a media company such as this, and here it is already in his spec.
Yeah, I think this announcement last night took a lot of people by surprise. But, I don't think it was a surprise that he is looking for some new way to directly connect with his supporters. After he got kicked off Twitter and Facebook, he really lost a really powerful megaphone that allowed him to, express his views, raise money. So it makes sense that he would try to create his own social network. He's also trying to potentially create some sort of streaming service. There was a PowerPoint presentation on this new company's website where it talks about competing directly with CNN, Netflix, Disney Plus, which are very large, well-established companies. So it's would be a big challenge for him to come anywhere near those companies.
Yeah. Well, and the thing is, right, Twitter's banned Trump permanently. Facebook announced earlier this year that he would remain suspended from its networks for at least 2 years and would be reinstated in 2023 only if, quote, the risk to public safety has subsided. I mean, what's been difficult for him, right, is social media was a free medium for him to get out his message. You know, if you don't do that, then you've got to spend on, you know, campaigns or TV ads or what have you, right, to reach your supporters. And you want to reach your supporters because you want the money to come in so that you can do whatever you want in terms of your political ambitions again.
Right. I mean, he's, you know, recently dabbled with some sort of blog that shut down after not getting a lot of traction, and has since been issuing press releases, which, you know, he really relies on the major news networks to actually cover. And a lot of them are not covering him the way they did, you know, when he was president, obviously, or when he was running for president. So he really lost a really important way to reach, you know, his supporters. And, you know, I mean, from a streaming video perspective, I mean, there's not a lot of details on what he's trying to do here, but it's not an easy thing to do. I mean, you've got to hire, you know, you got to have programming 24 hours a day. I mean, I don't think he necessarily wants to be on TV for that long. So you'd have to hire talent who can fill the airways for that long. You've got to hire people who understand the technology of streaming and you know, ensure that you get distribution on places like Roku and Amazon Fire, and it's you know, it's a lot more complicated than putting up a PowerPoint and saying you want to compete with Disney Plus and Netflix and CNN.
Hey, Jerry, I want to get your thoughts on the SPAC. Bailey Lipschultz, our colleague here at Bloomberg News, has an article on the Terminal out about the YOLO crowd, retail traders jumping in and helping fuel a jump. According to Bailey's story, it's the top purchase on Fidelity's platform, more than 35,000 buy orders from customers. I'm talking about Digital World Acquisition Corp. It's the SPAC that's set to merge with Trump Media and Technology Group. Are you surprised by this interest? I mean, what do you think investors are banking on here?
I mean, you know, I would think that they're banking on Donald Trump and the large base he has. I mean, he's no longer the president, but he still has enormous amount of influence over the Republican Party. He still has a lot of supporters out there. And so, you know, I think there's probably people who will take a bet on him creating some sort of social network or streaming service where he can, you know, leverage all those people that support him into some sort of business model.
Hey, just quickly, got about 30 seconds here. This Digital World Acquisition, the guy behind it is the Patrick Orlando. He's been involved in Wuhan, I think, too, a company. What do we know quickly? Just got about 20 seconds, sorry.
Yeah, I mean, you know, it's a little bit of a mystery to a lot of people,
Okay.
you know, and I think that if he wants to be successful, if Donald Trump wants to be successful in either of these efforts, social media or streaming, he's going to have to hire some talented people who know what they're doing.
It is fascinating. All right, Jerry Smith, thank you so much. By the way, Digital World Acquisition up 385% today.
Wow, massive
And I don't get to do gainers today.
You
Bummer.
don't. Let's get to Nancy Lyons with World and National News. Hey there, Nancy.
Hey, Tim. The CDC will decide today whether millions of people can get extra protection from the coronavirus. An advisory panel is considering another dose from Moderna and Johnson & Johnson. CDC Director Rochelle Walensky spoke to the panel.
Your votes are important, and of equal importance is how you approach each of these data and frame your recommendations.
The final decision will rest with Walensky, who will likely move quickly following the panel's recommendation. Negotiations are continuing among congressional Democrats who are trying to reach consensus on President Biden's Build Back Better agenda. West Virginia Senator Joe Manchin has been one of those expressing concerns about the price tag, but he says they are close to making some sort of decision.
Hopefully we can have either a framework we agree or we disagree, and it's either irreconcilable or it's something we can work out.
Manchin has also pushed back on some of the climate provisions included in the package. The Attorney General says he is committed to restoring the Justice Department to a position of independence from improper influence. Merrick Garland testified in a House hearing today and identified some key threats to the U.S., including what he says it's domestic extremism, violent crime, gun violence, and cyber attacks. He also talked about ongoing efforts to prosecute those involved in the insurrection.
The department is engaged in one of the most sweeping investigations in its history in connection with the January 6th attack on the Capitol.
Garland also identified civil rights as another of his key priorities, including voting rights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons, Tim Stanovic, and Carol Massar, live in the Bloomberg Interactive Brokers Studio in New York. We talked a lot at the Milken Institute Global Conference over the last 3 days about China and to what extent investors should be thinking about China. One of the top stories on the Bloomberg this afternoon is about BlackRock and UBS turning into China stock bulls as fears start to ease. Investor comfort with regulations, earnings are cited as key reasons.
Yeah, so BlackRock and UBS specifically turning positive on China's beaten down equities. They cite investors' growing comfort with Beijing's crackdown and an improving earnings outlook. So the upgrade to overweight by the world's biggest asset manager, and then UBS, which had a bearish view for 60 months, adds to the belief that the worst for the underperforming market may be over. It comes at a time, though, when a gauge for global equities is less than 1% from setting a new record high. Fidelity International also preparing to seize some deep value opportunities. This is when you've got to figure out what is your longer term perspective and what you think President Xi is up to. And I talked about this with Kathy Wood. I mean, she found it kind of perplexing, his crackdown on real estate, when so many Chinese individual citizens, so much of their wealth is tied into real estate purchases. And so if you clamp down, take away the value, what does it do to their wealth, especially at a time when he's talking so much about common prosperity and spreading wealth across the country?
Yeah, one thing that's been particularly interesting to me about the way that Kathy Wood's investments in China have shifted over the last few months is, one, what she told you earlier this week at Milken about how she saw the signal when Jack Ma was effectively benched and moved aside.
It was a shock, I think, to everybody.
It's not like she got out of China, though, completely.
No.
She just decided differently to focus on areas of the country that don't necessarily, geographically, that don't get the attention from investors typically.
Like robotics, I think she said specifically.
Yeah.
And so, really kind of narrowing down her investments.
And services that serve those areas.
This is interesting, and I we'll have to watch over the next few months. We've certainly seen the Dragon Index take a beating here in the United States, which tracks so many of those Chinese companies. All right, you're listening to Bloomberg Business Week. Coming up, we're going to check in with a story that's online at Business Week. It's also the Bloomberg Big Take. That's coming up.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to trade mixed. We've got the Dow lower, S&P, NASDAQ. They are both higher. Choppy day, though. S&P up by half a point, churning higher right now. Very close to a record, just about 2 points away. Stocks holding near that record as investors digest a spate of corporate results against rising expectations for inflation. Among the companies reporting after the bell today will be Intel. Last night we heard from IBM weighing on the Dow now, down by 8.7%. That is IBM. Tesla shares higher after last night's report. Tesla advancing now by 3.3%. 10-year yield 1.67%. 10 years down 6/30 seconds. Spot gold down 0.1%, down $1.50 the ounce at $17.20. And West Texas Intermediate crude oil down 1%, $82.55 a barrel. Bitcoin down now by 4.8%, 62,828 after climbing to a record yesterday. WeWork has gone public, finding a warmer reception this time around. WeWork, WE on the ticker. Its shares up now by 6.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the Bloomberg Big Take today, it's also, I think it's still the most read story on the Bloomberg in the past 8 hours. It's a story you'll also find online at Bloomberg Business Week. It's about the hidden ways the ultra-rich are passing wealth to their heirs, tax-free. It's a great story about Phil Knight, and yes, you know him as the co-founder of Nike. We've got our own in-house tax expert.
Ben Steverman is personal finance editor at Bloomberg News. He's with us in the Bloomberg Interactive Brokers studio. Ben, it is just a great read. I actually got to read it last night on my way home from the airport. What is Phil Knight doing? Explain exactly what he's doing with Egret.
Well, we really haven't had a view like this ever into how billionaires escape the estate tax. And there's really nothing extraordinary about what Phil Knight is doing. It's completely legal. But what we've been able to do is pull together some filings and really track them over the years with help from Anders Mellon and Devin Pendleton, my colleagues. And we've really been able to show how these tools, there's 3 or 4 of them, that you put them together, these loopholes, and billions of dollars can be transferred tax-free to your heirs. This is, the estate tax and gift tax, it's a related thing. There's supposed to be a 40% toll basically on every generation, and it's supposed to be something that fights inequality. Well, I think we could show in this story that it's basically an optional tax now. If you hire the right advisors, you don't have to pay it.
And it's legal, and he's not alone in doing it.
Totally.
Joel Weber, editor of Bloomberg Business Week, here with us as well.
So how specifically do I do this when I leave this room?
We're taking notes, Ben.
Legal? This would be a good problem to have. I don't think you have it, Joel.
Okay, all right.
No offense.
So
you never know.
What allowed us to gain, insights here that, previously all this stuff has been known, but like as you said, we haven't seen anybody bring it all together like this. So what helped us get that bigger picture?
Usually these things are happening. We know these things are happening because I've talked to the advisors who set them up, but we don't know the dollars and cents attached to them because when these wealthy people do it, it's all secret. What is different in this case is that Phil Knight is an officer. He's a former chairman and he's the founder of Nike, a publicly traded company, and the company is now effectively controlled by a trust that's controlled by his son, who's also on the board. And because of that, they both have the requirement to report their stakes in various entities that they control that have Nike stock in them. And so we've been able to track all these trusts and other transactions that have involved Nike shares over the last 12 years, and that really allowed us to tell the story.
Okay, so again, I'm curious. If I walk out of here, how do I joke? But okay, so what?
Not really.
But not really. So if Congress were going to do something, what would they do?
The fixes are just the simplest things. Like it's just a paragraph of text in the tax law. The problem is not closing these loopholes. It's legally, it's just the political will to do it. Basically, we have a situation, we have the stalemate over the estate tax where the Republicans have been trying to repeal it. They really hate the idea of taxing wealth at death. They call it the death tax. They've been trying to repeal it. under Trump, they just kind of gave up and they said, hey, we're just going to let it be and allow these loopholes to exist, and therefore it basically becomes this optional tax for the wealthy. So, but you were asking, how do you do it? How do these things work? What's the common denominator? Really, what this is all about is making your wealth look smaller than it really is. So,
I got no problem there.
Yeah. So,
how does Phil Knight do that?
Well, let's say you hand your heirs a really valuable asset, and then they hand you back an IOU. And according to the law, no actual money was transferred hands there. Nothing. That wasn't a gift. It's just we're just swapping assets. Except the asset that I have is an IOU. It's not a normal transaction that any smart business person would ever really make with a counterparty. But you can set up these relationships with your heirs or with trust controlled by your heirs, and they're legal. And it would be very easy to ban these deals.
And as a result, then, in terms of taxation, how does that kind of...
Well, let's say I give you, in this case, I give you Nike stock, then Nike stock goes up 1,000%.
Right.
All those gains can go to your heirs. And there are these special, Tim mentioned GRATs, there's these special tools called GRATs, which are really kind of...
Grantor retained annuity trust.
Yes, and they work a little bit like what I just described, but the thing about a GRAT is so let's say I give you an asset and the investment value goes down over time.
Right.
Don't worry about it. Just scrap up that piece of paper, rip it in half, and you can start over. nothing ever happened.
You said some of the ultra-rich open one every month.
Yeah. It's just you keep rolling the dice, hope that you can, and you don't have to you put almost any investment in these things, and just hope for the best. How much revenue do we know? Do we know how much revenue the U.S. government misses as a result of a loophole such as this? Put it this way. Only $17 billion, which maybe sounds like a lot of money, but only $17 billion comes in from the estate and gift tax. There are literally almost the 20 richest Americans have $2 trillion almost. So the amount that this tax should be coming in from this tax, if it was actually imposed 40% on every transfer of the top 1.1%, it would be a lot more. Yeah.
And to that end, do we have any sense? I mean, Phil Knight is a very prominent one that the story basically is built around. Do we have a sense of how many other billionaires might be using this exact same playbook?
I would hazard a guess of almost every single one are using something that we describe in this story. Maybe not all of them, maybe not in a sophisticated way. The thing is, Phil Knight could have transferred even more money than he did, but he has these charitable intentions. He says he's going to give most of his wealth away eventually. So because if you're going to give money to charity, it just becomes a lot easier to avoid the taxes, and then that's intentional. That's not necessarily a loophole. It's just the government wanted to encourage people to give to charity.
And again, though, I mean, I feel like it doesn't sound like there's any momentum to change it.
Well,
or is there?
Yeah.
We might have just created it with this story.
We'll see. The House Democrats have a proposal, and in a lot of ways, they've scaled back Biden's tax proposals.
Right.
But the one exception is this area of the estate tax, and they are actually trying to close a couple of these loopholes.
I was going to say, you can see the headlines and the controversy over not doing something.
Hey, Ben, you and the team reached out to Nike and Phil Knight. Any response?
What they've made clear is that all these plans are integrated with his philanthropic goals, but no, they didn't give us many more details than we had. All these details in the story came from our own reporting.
You do it so well.
Thank you.
You really do. The details, and as we said, it's the most read story on the Bloomberg. Find it at businessweek.com. What?
I got to go set up my GRAT. Joel, maybe we can share a lawyer.
So you give me that IOU, and I'll reach out to you from a beach.
Sounds so simple. All right, we got to run. Joel, thank you so much. Joel Weber, editor of Bloomberg Businessweek. Ben Steverman, personal finance editor at Bloomberg News. As we said, find it online at businessweek.com. You're listening to Bloomberg Businessweek. Carol Massar, Tim Stanovic. Coming up, we're going to talk about the supply chain troubles and what the Biden administration is trying to do.
news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are drifting near a record as inflation fears weigh on the market. The S&P up now by 2 points, up 0.1%. The Dow down 90, down 0.3. NASDAQ up 63, a gain there of 0.4%. 10-year yield 1.67%. Spot gold little change, down less than 0.1%. 17.81 the ounce. And West Texas Intermediate crude down 0.9%. 82.66 a barrel. As for the U.S. economy and the labor market, Tiffany Wilding is chief economist at PIMCO. She spoke with our Tom Keene this morning on Bloomberg Surveillance.
We expect jobs in October, net job gains to start to pick up when we finally get that report in a couple of weeks. So we do see some really encouraging signs that the economy is reaccelerating. And again, this makes us, more confident that, monetary policy can kind of get on with this tapering business that we expect in November, and we can continue to recover from this pandemic.
Airline earnings, Southwest trimming its flight schedule for the second time since August. CEO Gary Kelly spoke this morning with Bloomberg Television and Radio.
Yeah, we're still working our way out of this pandemic. We're beyond the survival stage and into the stabilizing phase, and it's just a matter of getting our staffing aligned well with our flight activity and our customer activity.
Southwest Airlines shares down now by 1.5%. Among some of the other airlines that we track, American Airlines up 1.3%. UAL, that is the parent of United, up 1.1%. Delta lower now by 0.1%. Intel will be among the names reporting after the close of trading today. So again, recapping here, equities pushing higher, at least for now, with the S&P up 4 points, up by about 0.1%. The Dow down 83, a drop of 0.2. NASDAQ up 66, a gain of 0.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so top of mind at the Milken Institute Global Conference. We had so many conversations there on the West Coast. We've got our TV team out there at the coast of outside Los Angeles, Long Beach.
Yeah, the port of LA.
Right, just about the supply chain problems. Yeah, I know. The synapses aren't totally firing for all of us.
The two ports are very close together.
Nice
together they do account for a great portion of the traffic.
The common theme here is supply chain disruptions and constraints, and we see it big time as companies report their latest quarterly updates. And as our Josh Wingrove reports, the clock is definitely ticking on the efforts by the Biden administration to smooth out the bottlenecks. Their tool chest too, Tim, a little bit limited.
Josh Wingrove is White House correspondent at Bloomberg News. He's with us from the Bloomberg 99.1 studio in Washington, D.C. Josh, what power does the Biden administration have? What tools do they have in order to help fix this logjam?
Well, I guess it depends on who you ask, but overall, it's sort of like Joe Biden is a dad driving a station wagon, threatening to pull this car over right away if
I
people
grew
don't.
up that way. I totally get it.
Yeah, people don't behave. Like they've got this. Everyone's calling it a bully pulpit power, which is another way of saying, I suppose, name and shame. They can either be the referee, they can get people in a room, crack some heads together if needed, and that's sort of the approach they're taking, and that's what led to that deal to move these ports to 24/7. Of course, that is only marginally making a difference, and
Can
won't
I
make
just
much of a difference
say,
until we get more other things going.
Every
24/7.
time, Josh, we hear that, we're like, what do you mean? Why weren't they already 24/7? Like, what is that?
Well, there's no point in picking up a thing at 3 a.m. if the warehouse you're taking them to is closed, and the warehouses are closed at that hour. And so these truck drivers, it's important. These port truck drivers have a raw deal. I mean, it is not a coveted position. And so we're wondering, well, why aren't there enough truck drivers? Well, gee, they're quitting because the pay and conditions are crummy, and they're even crummier when things are backed up because they're sitting there unpaid waiting for their thing.
Hey, talk about that a little bit, Josh, because that's something I learned reading your story that is available at Bloomberg.com and on the terminal. It's not like a trucking job for another firm. These are not unionized and, like you said, pretty crummy.
Yeah, and there's been a bunch of suggestions put forward by various industries, either long-running regulatory battles that they're picking the supply chain crisis as a new sort of front to wage these long-running battles. But the only thing the Teamsters have said, getting to your question, Tim, is they think Joe Biden should help these guys unionize, these drivers, unionize. And Joe Biden hasn't said anything about that, so we'll see what that happens. But essentially, they are the bottom rung of the ladder of the trucking industry. The pay is not great. The trucks they're driving are, in some cases, very thin margins, shall we say, less collegiate. They're barely holding on. It's a rough job, and if they can get a job at a sort of either a unionized place or you're working for a bigger company with better conditions, more predictable hours, they're going to take it. It's no surprise.
Help me though. So port drivers, how are they different from the long haul drivers we see on the road when we're on a highway drive or something? What's the difference?
Well, they're all treated or typically treated as independent contractors, and that means that they get paid either by the mile or by the shipment, but as opposed to by the hour. So when they're sitting there waiting to pick up, it's on their time. They're not getting paid for that, and that's not great, right? And so there's not a lot of incentive for someone to hurry them up. They have no choice but to sit there and wait for their container. And when they get it, we don't have enough chassis, which of course are the little essentially trailers that pull these things around. And you go every step down the ladder, it gets harder. The warehouses are full, the yards are full. We don't have enough of these containers. We don't have containers going back full in a lot of cases. Ships pile up empty containers and haul butt back to Asia, if you will, because they can get a lot more money for filling them there and bringing them back to the U.S. So a lot of moving parts on this, but it is a tough one to parse in terms of certainly quick fixes, but even structural fixes will take a long time.
So they're different from an Amazon driver that we see on the road or a Walmart driver that we see on the road.
Although many of those drivers, I'm sure, in California used to maybe had come up through the ranks of being a port truck driver. I mean, it is it's rough. It is the bottom rung. They have not been treated particularly well, and that now they're sort of even getting a rawer deal because when things are slowing up, the only person not getting paid to sit there in the gridlock is that truck driver. The dock workers getting paid, the railway workers getting paid. The truck driver isn't getting paid.
Well, Josh, as a result of all these challenges that you're describing, shipping prices have just risen dramatically. It now costs as much as $25,000 to import a 40-foot container from Asia. That's up from less than $2,000 2 years ago, more than 10x in price of shipping. So politically, where does the president stand? I mean, you see Republicans coming in with going full court press on Biden because of these rising prices.
Yeah, and they're tying it in with the inflation issues we're seeing, and that is, of course, expected. I mean, you're like, why am I talking to a White House reporter about this? It's because it's becoming a problem for Joe Biden,
Yeah.
And so we're going to see if he can do it. Now, look, this is going to boil down. If you watch Fox News, this is going to be the worst crisis of supply chains ever. But what it's going to boil down to is you're going to wait more for certain goods than others, and it's not so much that there's going to be a lack of goods across the board. In other words, the toy stores shelves will be full. You just might not be able to get the toy that you want, and that's going to be a political issue. And so we'll see where that goes. The backdrop for all of us to remember: we're buying more stuff than ever before. This is not a system that is failing to handle the normal amount of stuff. It is record stuff, even with all this gridlock. It is record amounts of stuff for a range of reasons. One being the American consumer is more powerful than ever. Another one is we're spending money on stuff instead of experiences because of the pandemic. And so we are force-feeding record amounts of stuff through what the Biden administration calls, your grandfather's system, like, an antiquated, creaky, old piece of infrastructure, a system of infrastructure, and, lo and behold, it ain't going very well.
Wait, hashtag infrastructure, perhaps, Josh?
Yes, infrastructure. There is money for ports in the infrastructure bill, which, of course, is one of the two bills that Biden is, pushing to get a deal on right now. So as they water down that Build Back Better bill, that reconciliation package, the hope is that if they can get both through, that there'd be money for ports in that other one.
If Donald Trump gets his social media channel up and going, it will be the toughest crisis ever.
mean, we're all looking forward to that, I'm sure.
As a White House reporter, I know
Come
you are,
on.
Josh.
It makes it interesting. It makes it interesting.
Yeah, I got over enough notifications on my phone. I suppose one more couldn't hurt.
That's right. Pile it on, pile it on. Josh, thank you so much. Josh Wingrove, it's a great story. It's so in-depth, explains the supply chain crunch that we're seeing right now. He is Bloomberg News White House correspondent there in our 99.1 studio in D.C.
Well, let's stay in our 99.1 studio and get a check from the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. House Speaker Nancy Pelosi says lawmakers are close to moving on President Biden's social spending priorities.
We're almost to the stretch. We've rounded the turn, and we're almost to the stretch. And we're making great progress to our goal of securing a framework agreement for Build Back Better in a timely fashion.
Pelosi does admit, though, the package is likely to be much smaller than the initial $3.5 trillion plan, but she says it will still be transformative. The president is pushing lawmakers to come to an agreement by the end of next week. Attorney General Merrick Garland has been outlining his agenda to lawmakers today. Bloomberg's Irv Chapman has more on his testimony before the House Judiciary Committee.
Chairman Gerald Nadler asked Garland to endorse voting rights provisions, which he did. Ranking Republican Jim Jordan assailed the creation of a hotline to report violent threats against school boards, which he called
a snitch line on parents who object to some racist, hate America curriculum.
The Justice Department supports and defends the First Amendment right of parents to complain as vociferously as they wish.
Republican Louis Gohmert charged,
"You're viciously going after people that were protesting on January 6th.
Garland said he couldn't be specific because that would prejudice their cases. In Washington, Irv Chapman, Bloomberg Radio.
Former President Donald Trump says he is launching a new media company with its own social media. He says the goal in launching the Trump Media and Technology Group and its Truth Social app is to create a rival to the big tech companies that have shut him out. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons there in our Washington, D.C. bureau. So let's talk a little bit about a story on the terminal. It's by our Mark Gurman. Love everything, Mark Gurman. About Google slashing the fee it takes from app subscriptions in half.
You're saying, wait a second. App Store
second.
subscriptions, Mark Gurman, why are we talking about Google and not Apple?
Why are we?
Because it's a problem that Google faces as well. Apple's getting a lot of the attention because of the lawsuit, but Google's involved in a similar one. Alphabet's Google is slashing fees it takes from subscription services beginning January 1st. The Google Play Store will charge third-party subscription apps a 15% commission. This is what the company said today. Previously, subscription apps were charged 30% for the first year and then 15% thereafter. Google also charged 15% for the first $1 million in revenue.
So they're the platform that offers the apps, correct? And so it's anybody who puts an app on that platform, they get charged a commission fee.
Right, you can think about it as Google's version of the Apple App Store. So if you have an Android smartphone, you get apps from Google's Play Store. If you go download Netflix there or Spotify there and then subscribe to those apps or those platforms through Google rather than doing it directly through their websites, then Google gets a share of the revenue.
And they both kind of need each other, right? Obviously, the apps need the platforms, otherwise they're dead in the water. But what makes, a platform even more desirable is everything that's on it, right?
Yeah, exactly.
Chicken or the egg, which came first?
Well, Google said that it's making the change because customer churn makes it challenging for subscription businesses to benefit from getting a discount in the second year. Quote, digital subscriptions have become one of the fastest growing models for developers, but we know that subscription business faces specific challenges in customer acquisition and retention. That's what a vice president at Google said in the blog post.
Well, the thing is, if you're an app developer, right, you really only have a limited couple of, places that you can put it, right? It's Android or Apple, right?
Exactly.
Am I missing something?
No, that's right.
So if you think about, I don't know that I would say monopoly, but, Apple,
you could use that word.
And Google have a lot of power in terms of what they charge. So you kind of understand why these changes are being made. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. It has been a choppy Thursday session, but right now we have got the S&P at or near session highs, the Dow being weighed down by IBM, NASDAQ pushing higher. Lots going on today. Earnings a key theme. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed right now with the Dow down 67 points. Like you said, S&P is trading higher by 6, and NASDAQ gains 80. The U.S. 10 yield at 1.68%. Gold is little change. Transports rise 133 points, and Bitcoin is down by 4%. Among the main 11 S&P sectors, consumer discretionary and real estate led. Energy was under pressure, and leaders to the upside in the Dow, Nike and Home Depot, while IBM and Dow Inc. led to the downside. After earnings, you mentioned IBM. Shares fell 9%, while Tesla rose as much as 4%, and it hit $900 a share. In other news, the Intel CEO said the semiconductor shortage to continue until 2023, and Google is going to slash the fee it takes from App Store subscriptions. That sent shares of Match and Bumble soaring intraday. Wrapping things up, Intel and Chipotle report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
What do you call those boards?
Vision boards.
Vision
Is that
boards.
right? Vision boards? Yeah.
Jenny Serrain, you call them vision boards. Okay, so folks, we're talking Pinterest, we're talking PayPal, aren't we, Tim?
We are. I mean, this was a head scratcher to me when our own Liana Baker and Ed Hammond yesterday broke the news that PayPal was interested in acquiring Pinterest. We saw Pinterest stock shoot up as a result. Jenny Serrain shed some light on what exactly PayPal could do, and it has to do with ambitions to create a super app a la China's Alipay and WeChat. Jenny is with us right now. She's finance reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. So if we look to China and what these Chinese companies have done with these so-called super apps, what does that tell you about PayPal's potential ambitions if it were to acquire Pinterest?
Yeah, I think it's so hard sometimes for Americans to really conceive of what China has going on, but it's really a one-stop shop. You can do everything. You can do social media, you can go shopping, you can do investing, you can have your bank account. It's everything. And so PayPal has actually been really vocal that they want to do something similar here in the U.S. Their CEO, Dan Schulman, he talks a lot about being a destination app. So instead of having 50 or 60 different apps on your phone that you have to go to, he thinks that there's going to be 5 or 6, and he wants PayPal to be one of those 5 or 6 that you kind of go to on a daily basis.
Kind of like an aggregator, right?
Exactly. I think so, but an aggregator, but I think he wants it to all be in the PayPal house. So,
yeah.
Pinterest or no Pinterest, I think this is definitely the path they've been on, and we've seen them add a lot of new and interesting things lately.
Go ahead.
Well, this is a hard thing to do because this is not new for an American company trying to do this. Years ago, David Marcus, who years ago at Facebook headed up Messenger,
right,
when they split off Messenger from Facebook. I'm talking years ago. He talked about wanting to create a super app then, Jenny, and look at Messenger now. It's no super app.
Yes. So super apps have come and gone, lots of them in the U.S. We're littered with failures on this front. And so we haven't been able to pull it off. And a lot of times folks point to like consumer preferences. Consumers in the U.S. seem to really like kind of having their one app for finance, their one app for social media, their one app for shopping. Amazon has tried, Google has tried, so many folks have tried. And we really haven't seen anything get pulled off here.
Well, is there something that we can learn from looking at the success in China that says, okay, yes, it can be replicated here in the United States, or are the way Chinese approach maybe things different from how the U.S. approach things?
I think it's so hard to say. It definitely seems like U.S. consumers have shown their preference so far, but we haven't really seen anyone go at it in the way that PayPal is going at it. So, PayPal does have 400 million users already, and they've just slowly tacked things on. Absolutely. So they've slowly tacked things on. So you've seen them this year get into crypto. You can buy, sell, and hold crypto. You've seen them, talk about adding high-yield savings. They're going to get into stock investing. So they're kind of slowly bolting on, and they're starting from that financial services perspective, which, a lot of the other times, like Messenger Messenger, for example, or on Amazon, they'd be coming at it from other angles and trying to tack on the finance piece. I think that's harder to do. So we'll see. We'll see what PayPal has in its sleeve. But I think it's an interesting play.
Well, how does Pinterest fit into this then?
Yes, so Pinterest is a unique among the social media folks, right? So they have...
And for $45 billion.
Nice healthy premium for those guys. But they're unique in the sense that, what PayPal talks a lot about is wanting to be at the beginning of the shopping journey. So they don't want to be the thing that you click on at the very end when you're about to check out.
Ooh,
they want to come back and kind of be along the way. So Pinterest would give them that. People go to Pinterest and they're like, I want to buy some cowboy boots, and they look and see what there is, and then they have added capabilities in recent years where you can click and shop directly from the pins. So you could see a somewhat of a synergy there. But it's definitely a field. It's definitely not what you think of when you think of PayPal. So it would be a big leap.
Is it too fragmented though already with a lot of big players that are actually doing it fairly well that it would be tough to see the model pivot so significantly different?
They're going to have a lot of convincing to do.
Right?
They're definitely going to have to teach and kind of ingrain a new behavior into consumers. Now, they have been super successful at doing that in the online checkout space. They're like by and far away the leader in that space. So they have, a track record in terms of convincing folks to kind of come around to their way of doing things. But this is a big leap and this is a big change.
Well, and then who's the other aggregate? Or I shouldn't use the word aggregated, but okay, as you said that there might be 4 or 5 of them, then is Google? Is it Facebook? Then how do we think of the world?
I mean, I think all of those folks would love to be a super app. And even if they've, tried and failed in the past, I think it's probably still on the table for them. You can't not look at the success that folks like Alipay and WeChat Pay have had, and not think to yourself, I want that. I want folks coming to my site, 10, 20, whatever times a day, and doing so many things that are revenue generating and all that. So I think they definitely, you can't not look at what's going on in China and India and Singapore and not want it, but you just don't have the consumer behavior quite here yet.
Exactly. Consumer behavior is such a challenge here, right? Because we're so used to just tapping credit cards or even putting our credit cards on our phone. And how does PayPal get people, Jenny, in 20 seconds to use the app to pay for something when using your credit card or tapping your phone is just as easy?
Yeah, it's interesting because the U.S., we were so far ahead in terms of, back in the 90s and early 2000s adopting credit cards, and it's like put us back almost. So now the rest of the world has completely passed us by. Tap to pay is totally old, but, we're just now coming around to that. So.
Well, we talk about that with FinTech. Where I talked about it at this panel I did at Milken when it comes to healthcare, that this idea of using the phone in emerging markets to help in terms of healthcare access, like they're ahead of us in the thinking. Great stuff as always. Jenny Serrain, she's our finance reporter at Bloomberg News. Check her out on the Bloomberg Terminal and at Bloomberg.com. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, look at the time.
What?
Pharaoh Master Tim Stenevec live in the Interactive Broker Studio. We are just under a half hour away from the market's close, and that means in just a couple minutes we're doing the chart of the day, the stock of the day, and of course,
I see Dave
the
Wilson
song
coming
of the day
around
with
the
Dave
corner
Wilson.
into the studio.
All right.
Here he comes. Right now, though, let's get back to that trading day. Hey, Charlie Pellet, where are we?
Well, we're at records right now. If we were to close right here on the S&P, 45.45. Right now, the S&P up 9, higher by 0.2%. 28 minutes to go until that closing bell clangs here on Wall Street. Got to keep it locked into Bloomberg Business Week for the very latest and find out if we set a record today. And of course, the big question, how will Asian markets react tonight? Will we follow through? Daybreak Asia will have us covered. S&P again up 9 right now, up 0.2%. Right to the numbers. We'll give you the why in a moment here. The Dow slumping 44, down 0.1%. A lot of that having to do with IBM. IBM shares after earnings dropping now by 8.8%. To be clear, the Dow down 0.1%. S&P up 0.2. NASDAQ up 0.6%. 10-year yield 1.67%. Spot gold little changed, up $1 the ounce now, 17.83, up by less than 0.1%. Crude down 0.9%, 82.65 for a barrel of WTI. Bitcoin slumping 3.9% right now, 63,397 on Bitcoin. The Federal Reserve's Beige Book said employers across the U.S. were struggling to attract and retain talent, and in some areas, vaccine mandates have made it even more challenging to hold on to workers. Dr. David Dowdy is an epidemiologist of the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg TV and radio this morning, he was asked about those employer vaccine mandates.
I do think that we can get to a point where we're not having the same huge waves of sickness and death. And I think that we might be there, but I don't want to say that we are there. I think we still need to see where things go over the next few months. If we make it through the winter without another wave, then we're probably doing pretty well.
Dr. Dowdy of Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Mixed bag for a lot of the vaccine stocks that we track on a regular basis. Pfizer, for example, little change, lower by 0.1%. Its German partner BioNTech, its shares up 6% right now. Those are the ADRs. ADRs of AstraZeneca up 0.8%. Moderna shares, they're up by 2%. J&J, Johnson & Johnson down 0.4%. Again, recapping, equities are trading mixed, choppy session, S&P at a record, up 8 now, up 0.2. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
It's one of the great rock groups. Is it Jersey? No.
About as far away from Jersey as you can get.
LA? Europe?
Keep going.
Asia?
Keep going.
Australia?
Now you're getting there.
Who is that? I know the sound.
Y'all were bopping along like you knew.
I know. Well,
I know. Well, I can.
Is it a one-hit wonder?
From the U.S. perspective, it is, but I think the band did not get its due.
The band. I don't know.
Its lead singer went on to become a government minister in Australia.
Now that is just crazy.
And then went back to reunite with a band.
Could happen in the U.S. too, Carol.
It could happen in the U.S. So who do we got?
Midnight Oil.
Oh, I wouldn't have caught that. Okay, nice job.
And the lead singer, Peter Garrett. Yeah, he served.
But everyone knows the lyrics to that song. It's such a classic.
Yeah, absolutely.
I
And
didn't see
it's
you
got
sing
oil
that.
in the title, and that was enough today to make it my pick for the chart.
Nice.
At least the band has oil in its name.
Very
which
nice,
is
Dave.
Close enough. Anyway, because the chart looks at oil. Specifically, it's something that Rich Bernstein's firm, Richard Bernstein Advisors, you may remember him.
Used to be at Merrill, right?
Yeah, investment strategist for years. Then he went off to start his own firm. Now he's got, last I checked, $4 billion under management. Nice. Not shabby. Nope. Big on a lot of, shall we say, old economy type stocks these days. And energy is pointing out that you can make the case that there's underinvestment in the oil business at the moment. And the way he does it is kind of an interesting gauge, maybe not the most stable one, but it's enough to make the point, is to take the weekly rig count that Baker Hughes provides for oil and gas rigs and compare that with the price of crude in New York trading. When you make that comparison, you find out, at least as of yesterday, you were talking the number of rigs equal to, you might say yesterday, end of last week, since it's a weekly number, 5.4 was the ratio in terms of rigs to oil price. And if you look back to 2010 and figure the average from there, 12 times. So
wow,
that's one.
So a lot less rigs.
Yeah, exactly.
Basically.
Not so much investment is his argument.
Correct.
So if you're out there and you're drilling, you potentially are in a positive situation. That's the way he figures it anyway. He made a comparison to the 2000s where numbers were even lower. And in fact, if you look at that decade, energy, the best performer among the 11 main industry groups in the S&P 500.
Yeah.
Dave, is there any nuance to this with efficiency from each rig or what a rig can actually bring on?
This is a pretty broad kind of indicator here, broad brush, you might say. It's just a way to get a way to get a sense of whether people are throwing money at the industry or backing away. And given the shift that we're seeing toward electric vehicles, you can understand why perhaps the money would just not be there the way it has been.
This goes to me the pivot that we're seeing from old energy to new energy, right?
Yeah.
Or old to alt. And we're seeing less investment potentially going in. We talked with the engine number one CEO, what they've gotten to do from Exxon. And, these companies are going to have to make changes because investors want it and also policies requiring them to do it.
By the way,
and the climate needs it.
Price of gas in Beverly Hills, above $5 a gallon.
Was it really?
Yeah. Yeah.
Wow.
Wild.
Well,
Is that you, Paul
it's those California standards.
I know.
mean, so the state
It
is
is.
a market
Was that in
unto
Beverly
itself.
Hills?
Beverly
It was
Hills,
so
but
expensive?
all over LA when I was going around, it was about $4 a gallon.
Whoa.
Yeah.
All right, stock of the day.
Heritage Crystal Clean. We're talking parts cleaning, refining of used oil, waste services. Not exactly the most elegant business, perhaps, but certainly looking up today. Company was out late yesterday with third quarter results, not quite following the calendar. The quarter actually ended on September 11th. Nonetheless, positives. And
big jump, up more than 7% today, huh?
Yeah, absolutely. And in fact, at one point it was up almost 12%. Got close to a record, and it gets your attention. So it's the fifth straight quarter that earnings beat analyst average estimate in the Bloomberg survey, and revenue also topping projections. The ticker on this one, by the way, HCCI, Heritage Crystal Clean Inc.
Where'd they come up with that ticker? I'm just kidding.
Yeah, really.
Should have seen the look.
I love when Dave gives us that look, or gives me that look.
All right, Dave, check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave. Stocks editor at Bloomberg News, Dave Wilson. Let's get to Nancy Lyons for check the latest world and national news. Hey, Nance.
Hey, Tim. President Biden says the nation is still dealing with hate. He says the through line in our history is that hate never goes away. While commemorating the 10th anniversary of the Martin Luther King Jr. Memorial in Washington, Biden spoke about the nation's recent confrontation with hate at the U.S. Capitol.
The violent, deadly insurrection on the Capitol 9 months ago, it was about white supremacy, in my view.
Biden added, quote, "We had a president who appealed to the prejudice, but he says the good news is we ripped the Band-Aid off." House Speaker Nancy Pelosi says Democrats' economic agenda will be smaller but still historic. She says lawmakers are working on the tax portion of the plan. Bloomberg's Washington correspondent Joe Matthews says that is undergoing some change after some pushback from moderates.
It would include a minimum corporate tax rate, a tax on stock buybacks, and a couple of other ideas as well here, including taxing billionaires, a so-called billionaires tax that would tax unrealized tradable assets, unrealized gains, essentially. Now, it's unclear, however, if this will make up the difference. That will blow a $540 billion hole in this whole plan to pay for reconciliation, according to Bloomberg News.
You can hear more with Bloomberg's Joe Matthew on Bloomberg Sound On at 5 p.m. Wall Street time here on Bloomberg Radio. The Fed is imposing a sweeping new set of restrictions on the investments its officials can own. It's a response to questionable trades that forced 2 top Fed officials to resign. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, folks, we got to talk a little bit about Bitcoin. It's something I talked about with Kathy Wood while we were at Milken. We've been watching the rise. Let me just pull it up on the Bloomberg. It's down about 4% today, 63,193.
It's still close to record highs. It's been up for 20 days.
That is remarkable.
Yeah.
I mean, you look at the line. Let me just pull up a graph here on the Bloomberg for you folks on radio. I mean, it has been almost a straight line up since, let me just look here, since the end of September.
Yeah.
Pretty much a straight line up.
It's been wild.
Remarkable. So another day, though, another major snafu, though, when it comes to cryptocurrency trading. This story, the price of Bitcoin rapidly plunged about 87% on Binance's U.S. exchange this morning, sinking to as low as $8,200 from around $65,000. The price did nothing like that on other venues, and on Binance, the level almost immediately snapped back to where it had been. But if you were fast enough, you could have got a bargain.
Here's what Binance said happened. One of our one of our institutional traders indicated to us that they had a bug in their trading algorithm, which appears to have caused the sell-off. That's according to Binance. Quote, we are continuing to look into the event, but understand from the trader that they are now fixed, and they have fixed the bug, and the issue appears to have been resolved. So you missed your chance to buy the dip.
Yeah, well, it was early, 7:34 a.m. New York time, according to Binance's U.S. website. Volume on the exchange in that minute was 592.8 Bitcoin, which are worth just shy of $40 million at current prevailing prices.
It's a flash crash.
It is a flash crash.
Really? Yeah.
But right, if you were quick enough, you could have done something. But I don't know, or could you have?
I don't know.
I don't know.
I wasn't quick enough.
I was still sleeping because I didn't go to bed till 3:30 this morning. But it is interesting. It's the latest in a string of recent high-profile trading problems in crypto. Synthetify, it's a new decentralized exchange, was forced to shut down for a while earlier this month, shortly after its debut, because of bad data provided by the Pith network. So there are things going on we're working our way through, especially since I think volume, interest, trading activity just continues to kind of soar.
Okay, just in the last 10 seconds, I want to get in this other story about Peter Thiel, the technology billionaire and conservative political donor. He praised crypto today and slammed central banks during an appearance on Wednesday.
Ooh, check out that story by Nathan Crooks. It's on the Bloomberg terminal and at Bloomberg.com. This is Bloomberg Radio.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks trading at a record right now with the S&P 500 index pushing higher, 45.44 right now. Will we see a record close? Higher by 8 points right now on the S&P, up by about 0.2%. The Dow lower by 52 points. IBM weighing on the Dow right now. The Dow is down 0.1%. IBM shares slumping 9.5%. NASDAQ up 76. That is a gain of 0.5%. 10-year yield 1.67%. Dow Transport's up 0.8% right now. Russell 2000 up by 0.2. NASDAQ 100 higher by 0.5. Spot gold up 0.1%, 17.83 the ounce. West Texas Intermediate crude down 0.9%, 82.68 a barrel on West Texas Intermediate crude. Celebrity-backed coconut beverage maker Vita Coco falling in its trading debut, while hot dog and hamburger restaurant chain Portillo's faring better in its opening trades as well as its initial public offering. Right now, we do have shares of Coco, COCO, on the ticker there. Vita Coco is down by 2.7%, and shares of Portillo's, it is up by 51.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Whether it's built in a factory or homemade, a gun is a gun. So why is the do-it-yourself kind almost entirely unregulated? Online sellers of parts for ghost guns aren't obligated to run background checks on purchasers, and the components don't have serial numbers. The finished firearms are effectively untraceable, and they're increasingly used in violent crimes. States are trying to fight back. New York is on the verge of imposing the toughest ghost gun regulations in the country. Meanwhile, California has joined San Francisco in suing several ghost gun retailers for fraud and false advertising. But states alone can only accomplish so much. Fortunately, the federal government is working on a rule that would close the loopholes that make ghost guns so appealing to criminals. The important thing is to act fast. The status quo is costing too many lives. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, let's get to it. We've got just about 10 minutes left in today's trading session. We are hovering near our best levels of the session. Looks like a record on the S&P 500 now, still just up about 8 points, as we heard from Charlie. Down on the Dow, we are seeing some pressure thanks to IBM. NASDAQ, though, also an outperformer on a percentage basis, up 0.5%.
Well, let's drive to the close with Chris Zaccarelli, Chief Investment Officer at Independent Advisor Alliance, IAA, joining us on the phone from Charlotte, North Carolina. Chris, it's great to have you on Bloomberg Business Week Radio. A month ago, we were talking about inflationary worries, and here we are at record highs again. What's going on?
Looks like the market is shrugging off a little bit of the concerns about higher interest rates for now. We're seeing, break-evens jump a lot higher, but nominal yields, staying pretty firm right around 167, 168. So I think for now, stock investors feel like the inflation that we're seeing so far is going to be manageable by companies, and profit margins aren't going to be squeezed too much. We'll see if that is a true forecast or if the market's being a little too sanguine about everything.
Well, it's interesting, right? And this is where those earnings reports are so important. I'm going to share a little bit of a statistics that we've got on the Bloomberg, and it says that of the 99 companies in the S&P 500 that have announced results in the third quarter, 82% have posted better than expected earnings compared to 84% for the whole season 1 year ago. As for revenues, 59% topped. That compares to 60% a year ago. So, not too shabby.
No, companies are doing very well. They're increasing sales. They're maintaining their profit margins. It's boom times for U.S. corporations, and so the question is, how long will that last?
Well, you guys have to make decisions, right? And figure out investment strategies and portfolio. How long do you think it will last? Do you think that the supply chain constraints are going to be manageable and not go on forever?
Well, I would think, by definition, a lot of these supply chain constraints and a lot of the inflationary pressures, at some point, they are going to resolve themselves. I think a lot of people were hopeful that they would resolve by the end of 2021 or early 2022. I think most people in the market are a little bit more cautious. I think that they think that supply chain issues could last possibly for a couple of years. Hopefully on the transportation side of things, it resolves more quickly. But you look at things like, shortages of semiconductors, which are so critical for almost every product in the economy right now. And, we're being told that to bring new production online and really ramp up to where we need to be, that could take a couple of years. So we do think that these problems are going to be with us for longer than many of us had hoped, even as recently as 6 months ago.
Well, it's interesting because we're seeing companies like Procter & Gamble take a hit to their bottom line as a result, and companies like Unilever raising prices as a result of this. As we do continue to get earnings from more and more companies, Chris, what are you looking for to see whether inflation is transitory or if it's something that's temporary?
Well, for us, we've definitely been a little skeptical of the idea that everything was transitory from the inflation front. I think we all understand a lot of the dynamics that were caused by COVID that in and of themselves have to be somewhat temporary, but clearly there's a lot building up into the input costs, into the supply chains, and again, like we said, things like semiconductors, they're going to last a little bit longer. So for us, we are really looking for those companies that are going to have pricing power, and you just gave two good examples of some companies are able to raise prices, other companies are having to eat some of those costs, and that's why everyone will say the biggest cliche in the book, which is it's a stock picker's market, and as an active manager, you always want to say that. But
we've heard that one recently.
Find those companies, yeah, you hear it a lot. But to the extent that you can find those companies with pricing power and do have competitive moats around their business, we're really going to see which companies actually do have a moat around their business and which companies may have strong brand names like some of these consumer staples, but don't have as much of a moat as investors thought or probably the company themselves thought. That's where the proof in the pudding is going to be over the next few months, if not few quarters.
Hey, Chris, quick question. So what if, what's interesting is we've got stocks up, minus the Dow, though we know that a lot of that is because of what's going on with IBM today. But if I look at the yield curve today, and if I look at what's going on in the 10, 5, and 2, we've seen yields kind of back up to some of their highest levels. Certainly of the day, you got that 5-year going up to above 1.2. That's the highest since February of 2020. We don't often, it's interesting to see higher yields, and yet we're also seeing higher equity gains. Is it just, okay, economy's growing, it's manageable. We understand the supply chain constraints and why that's pushing prices higher. But if this means that the Fed tends to raise rates sooner rather than later, what does that mean for the equity markets potentially?
So if the Fed begins raising rates more quickly than the market expects, all things being equal, you'd expect that to be a negative. And so I don't know that the market really believes they are going to raise rates so quickly. Clearly, the taper is going to be announced next month. It would be a shock if they didn't do that.
Right.
And based on most people's base cases, and ours included, you figure they wrap up tapering by the end of, let's say, June of next year. Call it somewhere mid-2022. The Fed, if they get their way, they're going to want to see unemployment just continue to go lower. And I think there's a real reluctance on the part of the Fed to begin raising rates. Even if you heard, President Mester yesterday, and so a lot of different people who have been speaking, they're really trying to divorce the idea of tapering from rate hikes. And so, inflation is what's going to force their hand. That's the trillion-dollar question, and I wish I had the answer for you today. But if inflation runs hotter than everyone expects, the Fed is just going to have to start raising rates more quickly. But if inflation stays somewhat manageable, above 2%, but not on a straight path to 5, 6, 7% on a continuous basis, I think the Fed's going to want to wait to raise rates. And the market may be surprised if they don't raise rates in 2022 at all, and they wait till January of 2023. That'd be a positive surprise for equity.
So, Chris, how do you play this environment? Just in 30 seconds.
Yep. So the way we're trying to play it is to have some balance. We've had growth in our portfolios all along. That was great last year. Adding some cyclicals, adding some values, which we've done at the end of last year and throughout this year as we've had time. Get more balance in your portfolios. You need to have financials. You need to have materials. You need to have energy and to some extent industrials. Balance those portfolios out. So many people are overweight technology, and that was great last year. That may not be so good this year or into 2022.
All right, we're going to run. Hey, listen, thank you so much. Really appreciate it. Chris Ceccarelli. He's Chief Investment Officer at Independent Advisor Alliance, joining us on the phone from Charlotte, North Carolina. So we've just got a few minutes left in today's trading session. And as I mentioned, watching yields moving up a little bit today, certainly seeing that move. And as for the equity markets, they are holding on to their best levels of the session. So it looks like we will indeed just seeing another tick higher on the S&P 500. So it does look like we're going to end with a record. Right now, the S&P at 45.49, up just about 13 points up for a gain of 0.3%. A little bit lower on the Dow. NASDAQ better by 90 points, or up 0.6%. All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the closing bell on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde out in Long Beach, California. Taylor Riggs out in New York, helping you count down to the closing bell. And here to help take us beyond the bell, it's our global simulcast. As always, we're going with Carol Masser and, of course, another tireless Tim Stenovic out there in the bubble in New York. What's going on, guys?
We are in the bubble. Just watching in the last minutes of trading, guys, we're seeing the equity markets take a leg up. So it does look like, Tim, that ultimately we're going to see another record on the S&P 500 today.
Yeah, the Dow Jones Industrial Average underperformed the other major indices, mostly due to IBM revenue missing estimates, a stock down more than 9%, dragging down the entire Dow. I'm also watching Bitcoin after yesterday's record of nearly $67,000. Bitcoin down about 5%.
Yeah, but it is interesting that sudden desire to be getting into equities as we head towards the close. Even the Dow trying to break unch at the moment, getting into positive territory, even though we still keep having the same concerns about inflationary pressure, about transitory, but maybe it's just the commodities coming off the boil today that let us breathe a little bit of a sigh of relief when it comes to inflation.
Yeah, and you still have the earnings season going fast and furious here. It's going to pick up next week here, but so far what we've heard out a lot of these companies, I mean, it has to encourage you if you're an investor here. You're still seeing those margins holding up. You're still seeing some of that sales growth holding up. And more importantly here, the outlook that a lot of these CEOs and CFOs are giving is still positive.
Well, it's still positive, but you want to talk about inflation, Romaine. 5-year break-evens are at a 16-year high. 5-year yields are the highest since February 2020. Yeah. Are we repricing forward expectations?
All right, don't break us down here, Taylor. Look at that. Even the Dow Jones Industrial Average heard what you just had to say, and it's now trying to push into the green here. Oh, it's basically going to finish the day relatively unchanged. And right now on the screen, it's down about 10 points here. It takes a moment for these numbers to settle, but call it unchanged on the day. The S&P 500, there it is, folks, 45.49 and change, up 14 points. That is a new record high, 0.3% gain on the day, and nevertheless a record high. And Carol, real quickly, your NASDAQ going to finish the day higher by about 0.6%.
Yeah, but let's watch, because we're going to see pressure on those major equity averages, because Intel already down 3.5% in the after hours. Their earnings just crossing the Bloomberg terminal. Let's get to it. Third quarter adjusted EPS, $1.71. That's a beat. The estimate was for $1.11. Third quarter adjusted revenue, $18.1 billion, folks. This is where we get concerned. It's a little bit light. $18.24 billion was the estimate. Data center group revenue, $6.5 billion. That also, Tim, coming in light. It was supposed to be about $6.65 billion. And talking about the fourth quarter, the outlook. Fourth quarter adjusted EPS, 90 cents. That is light. The estimate on the street, $1.02 a share. And as for revenue, they're looking at about $19.2 billion. Again, Tim, that stock down 3.6% in the after hours.
Yeah, we're also learning that Intel CFO George Davis announcing plans to retire in May of 2022. The company is saying that it's seeing fourth quarter adjusted revenue of about $18.3 billion, beating estimates of $18.26 billion, Taylor.
You know, and Tim, it's interesting, just going through the press release here, perhaps maybe the data center light revenue could be to blame. They continue to say that they're breaking ground on new fabs. They're still looking at regaining some of their process performance leadership, unveiling a lot of information. This, of course, is the relatively new CEO, Pat Gelsinger, but still in the early stages of the process through their journey. Romaine, perhaps maybe a hint of caution.
Yeah. Yeah, I mean, look, I mean, you got to give some fairness to Pat here. I mean, he's really trying to sort of steer this ship into, I guess, a much longer term worldview here, and that includes sort of a refocus on fabrication. It includes a refocus here on some of those data center businesses here. Now, he hasn't quite gotten it there. You see that in those numbers. But the question is how long of a leash, I guess, are investors willing to give them?
Chips and ships. We've been talking about it all day right here from the Port of Long Beach as well. And so, I mean, these are the companies that are at the very midst of a supply chain crisis that we talk of, whether it's big chips. We're going to get Mattel, of course, the toy maker that's going to be struggling with its supply chain. We're fascinating as to how much the toys are going to be on time for this particular season. We've got Chipotle's that are going to be coming out. What about the food inflation? What about the issues there as well?
Well, and what's interesting, and going back to Intel for a moment, I mean, this is a company, we saw the story over the last week about Apple, right? They are increasingly doing chips and sophisticated chips in-house. So Intel needs to think about what do they want to be going forward in a market that is increasingly competitive, and they've really lost their edge. And that spending is going to take some time, Taylor, before you actually see those plants online.
Yeah, speaking of their plans online, of course, saying that over the quarter, Amazon was the first customer to use their Intel Foundry services, packaging services. They have a partnership, of course, with Qualcomm. But Tim, and again, you know this more than a lot of us, is there just some concerns about, are they pivoting fast enough, and are they able to make up some of the lost ground fast enough?
Yeah, that's the question. I mean, look, to Carol's point, the fact is it takes a really long time to build something when it comes to fabricating these things. So if there is a shortage, it's not like you can get that supply online very quickly. How much is it going to cost to do that? How much are they spending on that? And how much are they spending on R&D? Some things to keep in mind.
Yeah, I mean, look, and when we talk about, I guess, how you shift, everyone we've talked to says that this isn't something that can be done in any type of short order. This is a multi-year process here. And we'll get there eventually, but what does it look like? Is it going to be onshoring? Most people say no. We'll get some of it, Caroline, but not all of it.
And also, if you're pouring through some of the releases, and of course, kudos to our producers for pulling them out here, and talking about disruptions in transportation, disruptions in customer operations, supply chains, they're worried still about the virus. I mean, we're here in conferences, and we're getting back a little bit more to normal, but everyone's hearing of some family member, some friend who's getting the virus, and they're saying there's some issues to key personnel and harm ability to perform with critical functions. They're changing their business practices over at Intel.
And what's interesting is we do look at the share of the market. How often do we talk about Intel, but then we talk about the upstart, or quote unquote upstart AMD, that has increasingly been taking share from Intel. I mean, the market, for such a long time, Intel owned it for so many years, and it's not been that way for some time, Taylor. And they're playing catch up to some extent at this point.
Yeah, and it's interesting. Just go back to some of the retirement news. I'm just going through some of the mentions of that CFO, Intel CFO George Davis, saying, of course, announcing plans to retire from Intel in May 2022, going to continue to serve in his current role while Intel conducts a search for a new CFO, and they name a successor, Tim. So I'm still trying to sift through some of these headlines and hear a little bit more about what's going on.
Yeah, and look, we're still seeing that we're still seeing, Taylor, Intel mentioned in its earnings release, the COVID-19 pandemic previously adversely affected significant portions of Intel's business that could have material adverse effects on the financial condition and a result of operations. Taylor, I know you're keeping an eye on Mattel that's just crossing right now. What are you seeing?
We've been talking a lot about some of the supply chain issues and where is some of the toys floating out around. The adjusted gross margin guidance, forward guidance, that remains unchanged. CapEx guidance remains unchanged. But here are the numbers. Third quarter net sales coming in better than expected, $1.76 billion versus estimates of $1.68. Third quarter adjusted earnings per share also better, 84 cents versus estimates of 72 cents. And seeing full year net sales now, you guys, up 15%. Earlier, full year sales were only going to be up only 12 to 14%. Now seeing that up about 15%. So raising some of the forward guidance, despite the forward guidance on expenditures and gross margins remaining unchanged. So certainly here, Carol, looks like an improvement.
Yeah, absolutely. Stock's up about 16.5% here so far in 2021. We're seeing a pop in the after hours to up 3.3%. This is a company too that you want to know about the supply chain, right? You think about so much manufacturing that goes on overseas. We've talked with the CEO. We'll be talking to him tomorrow, and they seem to be able to manage that so far. And in terms of growth, Tim, they continue to do partnerships whether it's with WWE or others to propel some momentum and create some revenue growth.
Well, Ynon Krai is calling out the supply chain in the statement today, saying this was another strong quarter for Mattel. We successfully navigated ongoing global supply chain disruption, Romaine, achieving sales growth, and per the NPD Group, continue to gain market share.
Are you guys taking a look at Whirlpool as well here? Because, I mean, we talk about managing those supply chains. You talk about the work that the CEO of Mattel is doing, but what about the work going over there at Whirlpool? The work that right now has actually led them to actually lower their guidance a little bit, at least coming in lower than what the street was expecting. And I'm just wondering how close enough you're looking at that, Taylor, because when you see those types of numbers, it gets straight to a lot of the issues that we're dealing with out here.
Mark Bitzer, of course, he's been joining the show plenty of times from Whirlpool, and he was saying how hard it was for him to just travel out and see all of his manufacturing. Now we're seeing, of course, the issues with, I mean, I know last time you went into a big box retailer when I tried to buy my washing machines, or it's impossible to get hold of them. They are all sat out perhaps in a container right here, or they're unable to be made because they are full of chips. This is, again, supply chain pain being shown so front and center with our high cost goods.
The high costs certainly, though, are going to be pushing up sales, and I think that's what we're seeing with Mattel and Whirlpool, of course, as you're continuing to still see net sales. I mean, of course, coming in a little bit maybe lighter than expected, but how much do you think?
Is that unit sales?
Full year net sales is what I'm seeing here remain up about 13% versus estimates full year. That was previously about 16%, so maybe some of the inventory issues are starting to hit them.
Matt KitchenAid.
Yeah.
All right, lots of earnings, folks, and we're definitely seeing stocks move in the after hours. As we mentioned, we're seeing some pressure on Whirlpool. We're definitely seeing that stock down about 1.4%. Quick check on Intel as we wrap this up. This earnings parade, it's down almost 6%. We're still waiting, on Chipotle, on Snap,
Boston
and a few
Beer
others,
Company.
on Boston Beer Company. So we got to run. All right, that's going to do it for our cross-platform coverage on radio, TV, and YouTube. Beyond the Bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Earnings parade. I like how you described that.
Well,
That's absolutely what it is.
And it's a really mixed bag. You've got Intel, you've got Whirlpool. We're waiting on Sam. We're waiting on Sam Adams, Boston Beer Company. We're waiting on Chipotle. So these are really tapping into different parts of our economy and tell us so much. But Intel, we know they are trying to pivot. The new CEO, or relatively new CEO, spending billions in terms of, building new foundries and factories. But it takes some time. Stock down, though, about 6.25%. And that has to do with that forecast.
And the other side of the coin is Mattel shares higher by more than 6% right now. We're going to have Enon Kreis on the show
Barbie
tomorrow.
and Ken galore.
Yeah.
Just going to say.
Let's get to Washington, D.C. for a check of the latest world and national news. Hey, Nancy Lyons.
Hey, Tim. The House is voting on whether to hold ex-Trump advisor Steve Bannon in criminal contempt. Caucus Chairman Hakeem Jeffries urged his colleagues to act.
We must hold Steve Bannon accountable for his blanket defiance of a congressional subpoena for undermining the rule of law. No one is above the law.
Congressman Jim Jordan countered Jeffries' argument, calling it a partisan sham.
We got a completely partisan commission, 9 Democrats on this commission, on this select committee, targeting their political opponents.
There are 2 Republicans on the committee. There would have been more if Republicans had not voted against an independent bipartisan committee. House Speaker Nancy Pelosi is citing great progress in negotiations over a sweeping social spending bill.
Although it's a smaller bill, it's still historic, transformational, and will make an enormous difference in the lives of America's working families.
Pelosi says the spending package will be paid for and will pass soon. The leader of the Haitian gang that police say kidnapped 17 members of a U.S. missionary group is now threatening to kill them if he does not receive what he's demanding. In a new video, Wilson Joseph also threatened Haiti's prime minister and chief of police. The gang is seeking a ransom payment of $17 million, $1 million for every hostage. Royal Caribbean is announcing what it calls the ultimate world cruise, sailing to more than 150 destinations. Royal Caribbean Serenade of the Seas will set sail in 2023 on what the cruise line says will be the longest and most comprehensive world cruise, lasting 9 months. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. Carol Masser, Tim Stenovic, we got to break down some more earnings. You take Snap.
Yeah, my mouth is agape because Snap
know.
shares down 24% in after hours after the company missed on third quarter revenues ever so slightly. Revenues came in at $1.07 billion. They were estimated to be $1.1 billion. Adjusted earnings per share for the previous quarter, the third quarter, came in at 17 cents, so beating on the bottom line versus estimates of 8 cents. Third quarter revenue, again, missing expectations. The revenue forecast is what is trailing estimates. minutes, and that is why the stock is down, Carol, by 26%.
Yeah, I mean, listen, that forecast, not a good one, and it's really getting beat up. Let's just do quickly, Chipotle, it's up almost 1% in the after hours. We're going to be talking to Chipotle CEO Brian Niccol tomorrow live on air, and let's just go through the numbers. Chipotle third quarter comp sales, always important, 15.1%. That's a beat. The street was looking for 13.7% in terms of an increase. Third quarter EPS, a huge beat. I got to make sense of this. $7.18 versus $2.82. Wow. That's year over year. So that's just the year over year growth. That might make sense if you think about maybe where we were a year ago. Third quarter adjusted EPS of $7.02. That too is a beat. $6.35 was what the street was looking for. The outlook sees fourth quarter comp sales up low to mid double digits range. Sees fiscal year new openings at or slightly above over 200. The estimate was 212. So it sounds like it's relatively in line. And again, that stock is, quick check, up now almost 2% in the after hours. And that's after a gain of about almost 33% this year.
Eager this year to hear from Brian Niccol tomorrow, Carol, when we speak to him about how tough it is to get employees. And I'm sure there will be many questions on the earnings call. How much are they raising wages? We asked him about this 6 months ago.
I want to know about the smoked brisket that they put out, launched September 21st, limited time offer. Will they make it forever?
Have you had it?
No,
Yeah,
but I
neither
haven't
have
been out and about too much.
Yeah.
As you know,
Well, other people have eating Chipotle.
But I do love my brisket. Snap, let's just remind everybody, third quarter revenue, that was a miss. Third quarter adjusted EPS, trying to make some sense out of it, but we're seeing it really take a huge hit, massive hit in the after hours.
Revenue guidance.
It's all about guidance. All right, we'll continue to cover right here on Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Earnings fast and furious. After the closing bell, lots going on. Got to keep it locked into Bloomberg Business Week. Intel, first of all, down 6%. CFO George Davis plans to retire in May of next year. Intel sees fourth quarter adjusted revenue about $18.3 billion, estimates $18.26 billion, but Intel shares, they're selling off after hours, down now by 6%. Snap, a major story right now, reported revenue for the third quarter that missed the average analyst estimate. Snap shares plunging 29%. Chipotle's third quarter comparable sales came in with a gain of 15.1%, better than estimates of 13.7%. Chipotle shares after hours up now by 2%. And Mattel, it reported adjusted EPS for the third quarter that beat the average analyst estimate. Mattel shares, they're rallying now by 6%. So those will be stocks to watch in the next session. And this update is brought to you by Withum. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit Withum.com for more. A day of records on Wall Street with the S&P up 13, a gain of 0.3%. The Dow, late day rally, but still ended with a loss, down 6, a drop there of less than 0.1%. NASDAQ up 94, up by 0.6%. 10-year yield 1.68%. Spot gold little changed, up 90 cents the ounce at $17.82. West Texas Intermediate crude down 0.9%, 82.64 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that. We are definitely watching Intel down 6% in the after hours, Snap down about 26%. We're going to get back to that Snap story in just a moment. Let's talk a little bit about what's going on today, because if you didn't notice, it's actually a day without water day, October 21st. We've covered a lot of this here at Bloomberg Green and City Lab and our team more broadly about the growing global water crisis, Tim.
Mami Hara is Chief Executive Officer at the U.S. Water Alliance. Joins us now on the phone from Seattle. Today, Mami marks the 7th annual Imagine a Day Without Water. What is the message that you were trying to get across to the millions of Americans who don't think about this each and every day?
Take it for granted.
Thank you for asking. Imagine a Day Without Water is the Value of Water campaign's annual education and advocacy event on the value of water. Because our water systems are so often out of sight, we generally don't stop to acknowledge how important they are to our daily lives and what would happen if there was a day without water. This is an opportunity for people across the country to share why water is essential to them, to their businesses, and their community. And importantly, this is a day where we are asking everyone to learn where their water comes from and where their wastewater goes.
Well, and what's interesting is we talk about a day without water, but yet today some 785 million people globally do not have access to basic water services. The World Health Organization estimates that in less than 4 years, half of the world's population will be living in water-stressed areas. We already see water tables being compromised, right?
We just got back from California, Carol.
Right.
Where it's, as a Californian, it's almost all I think about when I think of California.
We made a joke in San Francisco, oh, might it rain, or did we have to make some provisions for it? And they're like, it never rains here. Don't you guys see what we're going through? So, all right. So tell us about some of the things that we need to be thinking about, we need to be doing, Mami, in terms of thinking about water and taking it for granted as a commodity.
There are many things that your listeners can do during this day and the days following. First, on a personal level, just taking the time to consider how important water is to your daily life and what it would be like if there was no water service in your community helps you to really focus on the importance of water. And then using this day as an opportunity to learn about the water in your community by asking yourself, where does it come from? Where does it go after you use it? Are your local water utilities or providers facing challenges like an aging system, drought, floods, pollution, or other problems? Are important questions to ask so that you can understand what to advocate for when you speak with people or communicate with those who make policies on investment and on water systems. So then, on the next level, your listeners can really advocate. We need a strong federal partner to invest billions and billions of dollars to modernize our nation's water systems. And right now, our congressional leaders are considering a federal infrastructure bill. This bill would provide much needed financial support for localities around the country, and it's potentially a historic investment. But it's only one step in closing the huge investment gap between where our water infrastructure needs are and what we currently spend on them. And so, there are many things that your listeners can do to help advocate for better investment.
Well, I'm wondering specifically what can be done, because I think about this and I think about it. We're just battling Mother Nature. I had a professor in college who just flat out said, people weren't meant to live in a state like California with the way that resources are there now. What are the specific policies that our listeners should advocate for, in your opinion?
Well, first and foremost, investment. But then we believe that there are more sustainable approaches for investment that allow for people to thrive in place, no matter where they are. You have to remember that a lot of people who live in water-stressed environments are the most disadvantaged in our country. And they don't have necessarily the means to just get up and go where they can be more water secure. And so by investing in ways of managing water that both leverage what we already have in place and that cooperate with nature and take advantage of the tremendous opportunities in engaging with natural cycles.
Right.
People can find more sustainable ways to thrive in place.
All right. Well, certainly some things to think about. And as you say, imagining a day without water, it's that way for many people already, but certainly for the developed world, that would be startling to say the least. Mami Hara, thank you so much, Chief Executive Officer of U.S. Water Alliance, on the phone from Seattle. We do want to just get back to some of the stocks on the move in the after hours, because this will definitely set up the tone of trade in tomorrow's trade. Intel, huge member of so many indexes, including the S&P 500. It is down 6.25% in the after hours, and there are some concerns about the outlook. We know this is a company that's pivoting. They did raise their full-year adjusted EPS gross margin guidance. They do see fourth quarter adjusted revenue $18.3 billion versus an estimate of $18.26. So it's costly, though, as they look to regain dominance. We know it's going to cost them a lot of money, and investors are going to be need some patience. And then there's Snap.
Yeah, Snap down more than 25% in after-hours trading. Revenue for the third quarter missed the average analyst estimates, just barely, though. It's the outlook on the top line and bottom line that is concerning investors. We're also seeing Facebook down 7% and Twitter down 7% in sympathy with Snap.
Right, they all play within that world and certainly get impacted. All right, we're going to dig a little bit deeper into those Snap results in just a moment. You're listening to Bloomberg Business Week, watching us on YouTube. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so we're watching shares of Snap in the after hours still down about 25% off their lows, but nonetheless, the stock getting cut big time.
Yeah, missed in terms of revenue for the third quarter, but it's the fourth quarter forecast that has investors concerned. The company investors were looking for $1.35 billion, but revenue coming in at $1.17 to $1.21. That's the range for expected fourth quarter.
We're going to dig into it with our Bloomberg Intelligence analyst, Mandeep Singh, in just a moment. But first up, Charlie Pellet, lots of earnings after the close here.
Indeed. We love days like this, Carol. We've got you covered. Let's begin with Intel, the world's largest chip maker, delivering a lackluster forecast for the current period, fueling concerns that the cost of CEO Pat Gelsinger's turnaround will weigh on the company's profits. Shares down now by about 6% in extended trading. You mentioned Snap, that stock recovering just a tad, have been down 29%. Shares, as you mentioned, down now by just about 24%. Chipotle's third quarter comp sales up 15.1%. Estimates there 13.7%. Chipotle after hours up now by about 2%. Mattel reported adjusted EPS for the third quarter that beat the average analyst estimate. Mattel after hours up by 6%. Stocks climbed to a record in a seventh day of gains for the S&P 500 index as investors digested a spate of corporate results amid rising expectations for inflation. Chris Zaccarelli is Chief Investment Officer at Independent Advisor Alliance, and he was our guest right here on Bloomberg Business Week.
Companies are doing very well. They're increasing sales. They're maintaining their profit margins. It's boom times for U.S. corporations, and so the question is, how long will that last?
10-year yield right now, 1.68%. What about the economic backdrop and what it means for Treasury yields? Jennifer Foster, Co-Chief Investment Officer for Equities at Chilton Investment Management.
What we certainly are seeing is that the underlying forces of the economy, even though there's a lot of noise, are pretty strong, and that could push rates higher. We know the Fed is going to taper starting soon, and that could also sort of gently push those rates higher. We don't see them running away.
And again, 10-year yield 1.68%. S&P up 13, up 0.3. The Dow down 6 points, little change there. NASDAQ up 94, up 0.6%. West Texas Intermediate crude oil down 1%, 82.59 a barrel. Gold, little change now at 17.82 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, watching this in the after hours. Charlie rehashing. We are too. Snap down about 25%. Third quarter revenue missing estimates, but a lot of it has to do with those privacy changes. Tim, let's get to it.
Yeah, Mandeep Singh is Bloomberg Intelligence Senior Technology Analyst, and he joins us now. Mandeep, we're focused a lot on the outlook, the top line and the bottom line for Snap as to why it's moving lower, but you've had some time to dig into these numbers. Why such a drastic move in the company's stock, down 25% right now in after-hours trading?
Well, they cut the outlook, 4Q outlook, by about 12%. That is a big deal for a company that had an analyst day beginning of the year, guiding to over 50% top-line growth, and now that it's taking down numbers in the second half, it's not a good sign.
They said multiple years of over 50% growth, right?
Exactly, and I think what it goes to show is we knew IDFA was a wild card.
Explain what that is.
Yeah.
So IDFA is really the identifier for advertisers that is there in the Apple's iOS operating system. They made changes to it. They obviously, basically communicated that to everyone. And what it has done is really reduce the effectiveness of all these ads that are shown, whether it's Snap, Twitter, Facebook. And I think advertisers have realized that ad efficacy has gone down, so maybe they are pulling back ad spending. Obviously, the company hasn't said that in the release, but we can infer, since they mentioned IDFA as one of the reasons, I think it's fair to assume that it is having an impact.
Supply chain weighing on ads. You and I, you came in and you said it to Tim and I, and you're like, I don't know exactly what does that mean? Do we know?
Well, so think of it this way. Snap is exposed more to larger advertisers.
Okay.
Facebook is exposed more to small businesses. And when it comes to large advertisers, there is that seasonality in spending. So maybe some of their larger advertisers were impacted by supply chain and they pulled back on their ad spending.
Oh, that's
so
interesting.
if Unilever has
Right.
to raise prices for the first time in years and Procter & Gamble is getting hit on margins because of supply chain disruptions, then perhaps they won't spend as much at Snap.
Exactly, and we don't know, we know Snap has more exposure to consumer packaged goods and these kind of industries, so more consumer focused. And like I said, the fact that they are more exposed to large advertisers does make them vulnerable, so you may not see the same kind of thing happen to Facebook.
And this is despite they talked about, 306 million daily active users in the period, beating predictions of 302 million. I mean, normally that would have been something that would have kicked the stock higher.
Absolutely. User growth was right in line with estimates. In fact, it did beat estimates. So it's really the ARPU that was down, and ARPU is a function of how much advertisers are willing to bid up on Snap's ad inventory.
You started off saying that they were very optimistic, as Tim said, for multiple quarters. How did they get this so wrong? What did they miss? I mean, what would be the question? You're like, hey, you guys, you were pretty optimistic just a short time ago.
I think they're going to blame it on the Apple's privacy changes and think of it.
But they knew it was coming.
Well, they didn't know it will have such a big impact on the ad effectiveness. And obviously, think of it this way. Snap is one app. Facebook has got multiple apps. Now, Apple's privacy changes affect a company that is just single app based. Whereas if you have multiple apps, you can still share data. So Apple's privacy changes don't preclude that. And I think that's where the scale matters now with advertising.
So it's interesting, though, because Facebook and Twitter both down. Facebook down 6%, now Twitter down 6.4%. So now they're concerned, and we'll hear from Facebook for the most recent quarter soon.
Yeah.
What should investors be looking for with these other companies?
Well, so obviously we were in a very, terrific digital ad spending environment for the last few quarters. And we know digital ad spending is cyclical. It goes in line with GDP growth. So maybe it's a sign of things to come, and advertisers may be pulling back, whether it's due to supply chain or anything else. But I think the kind of the top line that you had seen with digital ad spending environment, you're going to see that decelerate going forward. That is a leading indicator in my mind.
What is your chief question to the execs on the analyst call?
Well, I want to learn more about the supply chain issues that they talked about. Nobody can make that connection that, supply chain could affect Snap's revenue.
Is there?
Could they not get enough chips? Could they not?
Well, look, I mean, Snap is
No, really.
Snap calls itself a camera company.
Yeah.
And is there a container ship full of Snap spectacles somewhere?
Well, they talked about Google, a partnership with Google. So that is a good sign. The fact that they are looking at partnering with Google in some way, and they're trying to fend off, Apple. So the other wild card is Apple here. They've made all these changes, but guess what? It has to benefit them. At the end of the day, those ad dollars may be going to Apple, and Apple could be a formidable competitor in ads going forward.
Apple shares flat in after-hours trading.
Oh my gosh, amazing stuff. Thank you so much. I know it's busy for you, and you're going to probably have to go write a bunch of research, and your day is not over. Mandeep Singh, thank you so much of our Bloomberg Intelligence team. Snap shares, though, again, continuing to just fall off a cliff in the after hours. That stock right now is down 24%.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim, the CDC is expected to decide any time now whether millions of people can get extra protection from the coronavirus. An advisory panel is considering another dose from Moderna and Johnson & Johnson. CDC Director Rochelle Walensky spoke earlier today to the panel.
Your votes are important, and of equal importance is how you approach each of these data and frame your recommendations.
The final decision will rest with Walensky, who will likely move quickly if the panel does give its recommendation. The Attorney General says he is committed to restoring the Justice Department to a position of independence from improper influence. Merrick Garland testified at a House hearing today and identified some key threats to the U.S., including domestic extremism, violent crime, gun violence, and cyber attacks. He also talked about ongoing efforts to prosecute those involved in the insurrection.
The department is engaged in one of the most sweeping investigations in its history in connection with the January 6th attack on the Capitol.
Garland will soon be receiving a request from a House panel investigating the insurrection. The House voted 229 to 202 this afternoon to recommend contempt of Congress charges against former Trump advisor Steve Bannon for defying subpoenas from that panel. Speaking on the floor, Republican Congressman Adam Kinzinger criticized Bannon's claims of executive privilege.
Does anyone really believe Mr. Bannon's actions are covered by a blanket, no questions asked claim of executive privilege, one the former president has never actually made?
Kinzinger, one of 2 Republicans on the investigative panel, says no one is above the law. Global News, 24 hours a day, on air and on Bloomberg Quick Take.
All right, a lot going on today, and that includes WeWork going public again.
Yeah,
But
I'm
this
still trying to
time
wrap
doing
my
it
head.
differently,
yeah.
right?
Well, how about going from a valuation, Carol, of $47 billion in the private market just a couple of years ago to a market cap now in a public markets of $9.3 billion?
That's a big difference. And we know the trials and tribulations that this company has gone through. So we were completing its second attempt to go public. This time it went through a SPAC, valuing the combined companies, you said, Tim, at $9 billion. Newman's name peppered 197 times throughout the business combination filing, even though he is no longer an employee nor board member. Wow. It's a different time, right? He's not so connected here.
Yeah, all of that means that after WeWork's merger Wednesday with BowX Acquisition Corp, Newman is worth about $2.3 billion. That's according to the Bloomberg Billionaires Index. Even after his share sales, he'll still own stock worth $722 million in the new company.
That's right. And it failed to go public, we should say, in 2019.
Yeah,
It tried to. It came so close, right?
Yeah, the prospectus came out. And look, the WeWork, or the We of today, is a different company than it was a couple of years ago. After that failed IPO, by the way, which was backed to by Masayoshi Son and SoftBank to the tune of billions and billions and billions of dollars.
Right.
The company shed assets. The company also disconnected with Newman.
Litigation between the two.
Oh, yep, there was a lot of drama there, and the company started focusing more on just the pure play co-working, like it started out.
I think of the cover. I think it was a cover story at Bloomberg Business Week magazine, but it was all about they were trying to meet this. This community, speak much, no, this community, whether it was, I think, education, how you work, like everything, right, in terms of your world, they were just kind of spreading out to so many different areas.
Wave machines.
Yeah, like they just wanted to be your world.
The jet.
What's the jet?
The big jet that they had. But by early 2020, SoftBank scrapped the deal. The IPO was pulled. Newman's fortune peaked back then, though, at $14 billion.
Well, like I said, remarkable. And that SPAC, as we said, it was up today, right? It was up about 13%. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. We're keeping an eye on Intel right now. Shares down roughly 5.5% now. The world's largest chipmaker delivered a lackluster forecast for the current period, fueling concerns that the cost of CEO Pat Gelsinger's turnaround will weigh on the company's profits. Snap shares down now by 21%. They have been down 29% after the owner of the Snapchat app reported third quarter sales that fell short of analyst estimates. Chipotle Mexican Grill sales last quarter did top analyst estimates as the restaurant chain benefited from price increases and digital ordering, along with vaccination efforts that help bring some customers back to stores. A record on Wall Street for the S&P 500 index, advancing by 13 points today, a gain of 0.3%. The Dow finished well off session lows, but still lower by 6 points, little changed. Nasdaq up 94, up 0.6%. 10-year yield 1.69%. Spot gold at $17.82 the ounce. Bitcoin today lower by 5%, 62,738 on Bitcoin. West Texas Intermediate crude down 1%, 82.61 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So when we talk about social networking, crucial to really gaining access to professional opportunities, whether it's business, entrepreneurship, you name it, those networks have often been in place for decades for the establishment, and I'm often talking to him about white men.
Yeah, well, two co-founders and entrepreneurs are working to change that. Nancy Tellem and Natasha Hildebrand are the co-founders of Bass Blue. It's a nonprofit space dedicated to women's needs and fostering a diverse, authentic, and inclusive community. They join us on the phone from Detroit. Nancy, Natasha, how are you?
Great. Thank you for having us. Hello.
Hey, Nancy, I want to start with you. You moved to Detroit a few years ago from L.A. Give us the story about how you started Bass Blue.
Yeah, I moved from Los Angeles to Detroit about 6 years ago, and upon arriving, I was just amazed by the amazing women who I met, but many of whom didn't know each other. And I realized that what was really lacking in the city, and frankly in all cities, is that connection, a space where women can indeed connect, and with that, be able to add resources and support for working women, whether they're starting in the working space, whether they're in it, or they're looking to transition into something else.
Well, and Natasha, come on in on this. I mean, how does it work at Bass Blue in terms of bringing people together? Who are you bringing together? How does it all work? And you've done it before in L.A., New York, London. Tell us the results of bringing these people together. What's the impact?
Yeah, as you mentioned, networks are vital to success, right? And I've seen that success take shape in all of those cities you've mentioned. And that really starts with creating space for those conversations, as Nancy mentioned, to create those connections, as well as space to learn and grow and be exposed to individuals and areas outside kind of your silos. And especially as we, kind of get rooted in our careers sometimes, and even just the world we live in, we kind of stick to those silos. And what Bass Blue is aiming to do is really break those silos and get people talking to one another. And we do that through programming. So everything from having mentorship sessions to member matching programs where we match our members based on interests or life stages, or educational seminars on how to, start over again potentially, or how to brand a business, to education in the other side of the coin of a cooking class, or how to learn how to play poker even, or all the kind of different things that might go into the personal and professional.
Well, it's so true. Like, I think about, guys, forgive me, but, golf, the amount of networking and deals that get done on the golf course, or just talking sports. I see it just in and around our world, where guys come in, they don't even know each other, but they automatically start talking sports, and there's a connection. Nancy, so much of what happens, whether it's when we're talking diversity, whether it's women, whether it's people of color, we need to figure out how to create that pipeline so individuals can create companies or really have a trajectory to some of those senior positions in companies.
For sure. To your point, and this is obvious, something that I've experienced personally throughout my whole career, is that men do have an easier way through golf, through men's clubs, sorts of things to connect. And they connect on I'll say on a much more base level through sports and through actually playing of golf.
Mm-hmm.
For women, actually, our connection is a little bit more complex. And what we came up with Boss Blue, that we wanted to create a home-like feeling. So when people came to the space, it was very accessible and comfortable. And at the same time, using the programming in order to initiate conversation, collaboration, creation. We're really focused on, providing that kind of conversation, providing the network, allowing the members to offer up resources and to mentor each other to advance.
Well, and it's interesting, too, when you think about, I think about anybody, I've been part of clubs or something, when you actually have, Natasha, a physical space where people can collect, there's something about it where you can go and you can meet people that you've seen before, meet some new people. And you guys have a great mansion that you've done, I think it's in Midtown on Ferry Street, right? In Detroit. Tell us a little bit about the space itself.
Yeah, so we've got 3 or 4 stories really, and if you go from the ground up, on the bottom floor, we've got showers and lockers and a wellness and fitness space. We've got some Peloton bikes in there if you want to squeeze in a quick ride, if you will, in between meetings of the day, as well as get ready. I will also be doing a lot of meditation workshops and just kind of general wellness things down there. You then go up to our next floor, and we've got a full cafe and bar area, and that's in partnership with Marrow, which will have an amazing options for breakfast and lunch and happy hour. We've also got a lovely library area, which we plan to stock with books from local luminaries, as well as amazing female authors. You then go up to actually my favorite space in the house, which is kind of like the mezzanine. We have this little nook of a room that is as cozy as they come, which is actually fully stocked for conferences and conference calls and whatnot. And then we've got on the next floor phone booths, as well as a large conference room that is free of use to our members, as well as a little bar area and additional lounge space and meeting space. And then the last floor really is our gathering space. It's all kind of a gathering space, but that is kind of our event space. So when we talk about that programming, a lot of that will be hosted up there. We've got a full screening capability, of course, another bar, because happy hour is a great place to start those networks. And can't forget that. And then little touches throughout the house that really kind of foster collaboration.
Hey, Nancy, you've spent years working for-profit companies. You were at CBS for 15 years, a senior advisor to the CEO. You're the president of CBS Network Television Entertainment Group. You were president of Xbox Entertainment Studios. Boss Blue is a nonprofit. So talk to me about the structure and how you plan to keep it making money and why you chose a nonprofit for it.
Yeah, well, you know what? I got to say, honestly, when we first conceived of the idea, we thought of it as a for-profit, much like a lot of other spaces that you find primarily in New York and California. But as we kept going back to the mission, and we felt it was essential that the space be the mission first. And therefore, we really were committed to making it a nonprofit. And particularly, again, as a nonprofit, it kind of liberates us from this drive to actually make money, but to actually, if we could break even and really have our mission first and bring in, as you mentioned, a really diverse, inclusive membership, that's the most important, and provide the programming and those connections that's so needed. So the nonprofit piece of it is extraordinarily important. As far as, we've had, amazing response from donors who really believe in the mission.
That's great.
We also have membership fees that hopefully will also help us reach to this break-even point, hopefully in a couple of years.
Right.
We also, with the private event space, helps us as well.
Nancy, we forgive us because, and we hope you can come back and talk some more about what you guys are doing, because it really is important, and especially in terms of the access that you're giving. Nancy Tellem and Natasha Hildebrand joining us right here. Have a good and safe evening, everyone. This is Bloomberg.